New year begins, and what is it then that's in store, and more importantly, how should you be playing the market? We've got a special panel that we've got live right here to discuss just that. Joining in this evening on Marketer is Vaibhav Sanghvi. He's Managing Director at Ambit Investment Advisors. We've got Chakri Lokapriya from TCG AMC is joining in live from Chennai. Edelweiss Financial Services, Nitin Jain is here, and so is IIFL Wealth's Amar Ambani. Gentlemen, all of you, thanks so much for taking time out for us, and a happy Diwali from all of us here at ET Now. Chakri, I'm going to start with you. You know, the fact is that usually on Diwali day is a good opportunity, at least for us financial journalists, to look pretty, talk up the sentiment a little bit. But the fact remains that, you know, we don't really have much to talk about this Diwali because the Samvat year has been a really forgettable one. Would you agree, or do you believe that it's left you wealthier and wiser?
Good evening and happy Diwali. I think going forward, I think a couple of things. One is politics, I think, is less important going forward as it was in the last 1 year. And second, we need to focus on cyclical recovery in corporate India. If you look at corporate earnings across sectors, they're at 10-12-year lows. And on the other hand, for the first time, for example, Nitish in Bihar, post-election speech, he spoke about development. Now, if you talk about major regional parties, the elections coming up soon, West Bengal, Tamil Nadu. Tamil Nadu recently had a global developer investor meet, and they raised up from companies 200,000 crores to be invested over the next 5 years. So the Modi's bandwagon of talking development over the last 1 year has rubbed off on the big regional parties. And so it doesn't really matter even if opposition wins, as long as everybody is talking development, then corporate India benefits, Indians benefit, and stock market will be a big beneficiary.
Chakri, in fact, we will talk about all those points one by one in detail. Now, you know, as Vaibhav was talking about, you know, how the economic cycle is panning out right now, and matching to that, the market is also, you know, perhaps trading a little nervous now. You have been managing money across, you know, the BRIC countries earlier and even out of the West. What kind of an economic recovery cycle are we? And do you think there is a, you know, kind of a cloud now at the pace of that economic recovery, given what's happening globally? Just 2 days back, OECD cut the global growth forecast once again. This is the second cut in almost 3 months. Other agencies have also done the same. So though the recovery is playing out in India, is it the pace at risk once again?
I think here there are a couple of things that we need to focus on. Now, within emerging economies, you have exporters as well as domestic economies like India. Now, the exporters will see greater earnings slowdown going forward in the next couple of years. Domestic economies like India, emerging markets, are unlikely to see a slowdown. And also given the fact that India has earnings have bottomed out, I mean, they're at the lowest level of the last 10 or 12 years. And the capacity utilization is low, consumer confidence is just about recovering. It benefits from lower commodity prices. And the main trade partners for India are the developed economies, the US. US is doing fine, UK is doing fine, and bits of developed EU are recovering. So from our exports are largely intact, benefits from lower commodity prices. And therefore, even though the world might see a slower economic growth, it's because of this combination of commodity exporters versus commodity importers, which has brought the overall growth rates down. But India is a bright star in a slowing world.